Hi everyone, today is Tuesday, March the 4th. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. We are starting with the E-mini S&P futures on the weekly formation. It's kind of strange that we do it in the middle of the week, but there's something pretty important happening here and I want us to take a look at it. First of all, this range, we've had a lot of consolidation in this range, right? So traders want to do one of two things. They want to bounce up, holding the low region of this area near January 13th. We put that low in, that was $5,812. Traders are going to say, hey, I want to buy that dip. Or they're going to say, no, I'm coming in to the real breakout area somewhere between 57.30 and 56.60, somewhere around that area. Also happens to be the 50 on the week, right? Very big space. Traders are going to be positioned two ways. A lot of hedging is going on, and so they are using the futures to hedge what's happening in the broad portfolios. So they're selling the futures to lift what's going on in the portfolios as market action continues to rebalance across different areas in the space. Okay, I suspect that we have a bounce, but we could have a flush first and then a bounce off of the zones. Do you want to short these edges? You can. Just manage your risk. Okay, that's really the only thing to say here. You manage your risk on the rotations, but to me, it seems like there's a little bit more downside action, but we could have a reflexive bounce first. We have a big Tuesday night simply because I think it's sort of a proxy State of the Union address or something or the other, and with the administration in front of Congress and the like. I don't know if it turns into a shouting match. I don't know what happens, right? What I do know is that we are going to have volatility. So Globex tonight is going to be very interesting in my mind. All right. Now that we've looked at the weekly, let's go to the daily, see what's going on. All right. The daily chart shows clean downward trend. Bounces have been sell zones. We had 3 days where we tried to hold the floor of motion and tried to recapture the 50. No cigar. Now we sit underneath that area of consolidation. And so my thought is that we have more downside pressure that pushes us into these lower edges, the 200 probably, and then a reflexive bounce. Now, it is important to note that there will be buyers sitting around 58.11 or so. So my suspicion is don't short the low there. If it comes into that zone, anticipate a reflexive bounce, potentially taking us into 5873, and then rotate downward if you're looking at intraday motion in the chart, in my mind anyways. All right, so levels below, value area low, that's 57.20, 57.30. It's underneath the 200. Value area high is way up here at 61.60. Halfway marker and resistance/support looks like 59.22. I like the bounces being sell zones. I don't love shorting the floors, but we are in a break that says we should have a liquidation event coming into maybe 8:30 or so, and then potentially we'll see some inventory correction. Volume, selling volume continues to rise. That's not a good sign for buying pressure, but remember, markets need to take a breath, right? We don't flip out. We just take a look at what's happening and we plan accordingly. So let's have a look. Here we are moving at the E-mini Nasdaq futures. This is the NQ. What are we doing? We had a lot of holding patterns here. And now, especially tonight. We bounced off of the zones yesterday, but Globex action puts us in a liquidation break. Brings us down into 20,038. That's also the 50 on the 200. It's also the breakaway action from the last area of heavy congestion. I would not be surprised to see a flush and then a reflexive buying event, or a bounce and a reflexive selling event. So what am I looking for? I'm going to look for price action that puts me on the side of the trade with the least risk. We had 3 days of trying to get up above these areas and hold the floor. We could not do it. So to me, this suggests more selling pressure, right? We can't do it. Every single bounce is getting sold here. And so, of course, as you know, this is what I believe is a concerted effort to move the markets into these lower areas of liquidity. It will bring interest rates in. The Fed will have to move. And then we set a new cycle to move to the upside. All right? But this is normal. Markets don't normally go straight up, even though we've been feeling like they do that. It's not really something that actually happens. If you join the Benzinga Options Show today at 11 o'clock, we'll be talking about what's holding up, where the flight to safety is with big markets, and how we can position from an options perspective if we're so inclined to use this seasonality in our favor, right? And March normally puts lows in this kind of 5-year cycle that we're running in. A lot of stuff is getting recalibrated. Okay, so we bounced off of the 200 last night, or into the close of the day. We closed above the low, but we can't seem to get up over the VWAP action here. So this also tells me we could have ourselves a liquidation break, or a space where price action continues to the south and we build a new area of balance in the market. And as I mentioned, I think that's around the area of 20,000. There is a low volume node sitting down here at 19,787. We might end up seeing that, right? But this 20,000, big fat round number, I think we see some action there. I like bounces to sell today. Selling the low, I don't love it. A lot of stuff could happen today. You can do it. I'm not saying don't. I'm just saying if you do it, manage the risk. All right, let's go to the weekly chart. Look at the trend. It's straight up, folks. Straight up. Markets don't naturally do that. There is such a thing as mean reversion. A lot of people without a great deal of experience in technical analysis will say, hey, it's not real. The rest of us know that it is. Okay, so this is what we are looking at. We had a double topping formation. We talked about that weeks ago. And so the question is, what's next? Well, look at how far the YM is from the weeklies, from the weekly 50. It's very, very far. Look at the size of the consolidation area right here. Where are we likely headed? I think we head here, right? I think we head here. Old resistance, new support, 41,800 also happens to be the 50 simple moving average on the weekly chart in the E-mini Dow futures. Okay, now what's happening today? Well, interestingly, we have not broken the low of last week. So that's still a very important line in the sand. Are we going to see some reflexive buyers here? Well, here's the thing. See this range? We drew this one top. Let me get this here. Top to bottom. This is our edge. 50% of that move is 43,500. Also resistance, support, resistance, support, resistance, potentially. So the bounces into this area very likely to fail under this broad formation. Why? Because usually when we lose the 50 and we do not recapture it, we fall into the lower edges of the candlestick ranges. Okay? And those lower edges, October 28th, November 4th, these are the zones that we are looking at. Bounces, very likely to be sell zones. What is that number? 43,700. That's where I'm looking for a selling event. Hang on 2 secs. Let me put that right there. So that's what we're staring down in the YM. Do you want to short the lows? I wouldn't. We haven't broken the lows here yet. We could. You could short it, but you need to manage your risk. That's going to be the most important thing. The most important thing. All right. Bitcoin. Everybody was telling me, oh, Anne-Marie, got it wrong. Look at that big fat bounce. And wouldn't you know it, here we are, back near the lows. Listen, this chart looks just like, wait for it, this chart. Same structure. Same structure. Micro Bitcoin proxy for what's going on in the Qs. And so because I believe the E-mini Nasdaq is running the same kind of structure here, we are going to come right into this balance zone. Absolutely. No doubt about it. I would not be surprised if we get a really beautiful flush. I wouldn't be surprised if we got back to 50, which would be very delightful, I might add. That would be absolutely fantastic because it would wash out all the weak hands and it would build us a new structure of consolidation. Absolutely fantastic. Now, is that going to be a pain point for a lot of people that bought at 100 and are trying to hoodle? Is that how you say it? I don't know. I am not hip. I just want you to know. Of course, you probably guessed that already if you've been spending time with me. So, that is what I suspect. Now, I'm not going to take the victory lap just yet because they are trying to hold this zone. And if we have some kind of reflexive bounce, it could come back up here into 89. But I'm telling you, folks, every bounce into 95 to 97, I am selling. I'm selling it, and this is a good place to take partial profits. Bring my stop into break even. Bob's your uncle, right? This is not a buying formation. This is going to bring us into mean reversion. So 73, my minimum in terms of the potential bounce zone. 52, sweet spot. All right? And we'll see what happens. If we look at the daily chart, we got a lot more action going on here. I'm going to remove this horizontal line. It is very messy here. Let's see. That's our weekly Fibonacci. The 50 is up here near the point of control. And we've got 89,500. If it gets above there, buyers are going to try and get back into this congestion zone. But they are trying to build a new area of consolidation. All right, so if it happens to hold 82 today, there is a bounce action event that could take us to 95, at which point I'm going to sell again, right? I add back to the sell. The 200 on the daily is down here near 76. Tremendous liquidity patches from 70 to 74. Okay, so we'll see what's going on. Value area low, 68. That's where I'm looking for Bitcoin to move. All right, let's go to oil. Holy moly. Look at that. Oil continues to come in. Absolutely continues to come in. Now, this is a weekly chart. Look what's happened every time it's come into this 66, 65 area. Here's a newsflash. If we don't bounce off of this zone, all of this is going to liquidate, right? So let's draw Fibonacci here. Oopsie, well, I'll just change the direction. That brings oil to 57 at the first pass. Okay? Now, I think it's going to be a pretty rocky road doing that. But if you're looking for really aggressive buy zones with a tight stop, start working this area today. It's going to bounce into resistance. This is not a buy the dip and hold, because look at what's happening here. Everything is getting retraced because the momentum is so steep. The bounces are going to be sell zones. If it gets to 70 today, that is a very nice sell zone event. I don't know that it'll get there. Right? Look, there's literally, how far back do we have to go? There's nothing in the volume profile down here. Literally nothing. That'll be a cataclysmic cascade if it loses it there. The futures, all the speculators here are going to have to puke their guts out. Okay? Very important price action cycle in oil right now. Very important. Daily chart already broke down through this area. They're moving into this area near 68 and some change. Now, the next area is 66 and some change. Okay, and then below that, our 65.26 number. Bounces are clearly sell zones, folks. Bouncing into the 68 area. If it bounces above 68.30 and then loses 68.30, you've got yourself a nice sell zone. All right? I believe this is the new contract, yes. This surprises me. So my thought was that gold was going to give us a nice reflexive fade into 27.90 and then break to the north. But the dollar came in really sharply in the overnight, and that's got gold bouncing, right? We are still caught in the range between 28.50 and 29.60. That's $110, okay? Up here, everybody's been selling. So we have to be very careful buying a breakout here if that's what we're going to do. If it were me, I would be looking for shorting action at around 29.60. And if it breaks through that, 29.65, cover the short, wait for a fade if it comes, and then take the long action to the north. Because this range event, and let me reverse this Fibonacci, this easily could take us to 3,000. That's the next line in the sand. And I mean, look at how far away we are from these moving averages. Everything is just straight up. Let me delete this Fibonacci and this Fibonacci. All right. What are we looking at? See the consolidation event right here? Buyers stepping in at the last breakout zone. Actually, they ran it. They got in there at that 28.50. Now we're at that midline right here, and we're above the midline, so very likely to be long action here. Now, it's long action under negative divergence. So wherever it expands, it is going to contract, so do not chase this. Do not chase it. Notice, anytime we've got flattening moving averages that look like this, and then breakaway action with momentum that is not very high, we're going to have a reflexive pullback. So hang on, bounce out, pullback action on the horizon. I just don't know where it is. Wow, market is really fading off of that zone. I should have kept that stinking short. Dang it. All right, let's now go to SPY. Sorry, I love trading in the Globex hours. My mind is super clear. There's no noisy action. I can see levels really cleanly. I do like it very, very much. So my apologies where once in a while you hear me go, oh, I should have done that. Okay, so what are we looking at in SPY? Here's the weekly. I've moved this line at 568. This is the actual breakaway zone at 563. It's also where the weekly 50 is sitting right now. Look at the trend though. Low, higher low, higher low. They're going to try and bring a bounce event in here at some juncture. It could be a reflexive move down first, and then the rotation into congested resistance, or it could be the bounce up first, and then a rotation. I have no idea which one. If you decide you want to try a buy zone here, there are several things that are saying, hey, you might be able to get that. However, momentum and trend say that if you tried to buy this dip, probably not the right thing to do at this juncture without expanding your risk fairly significantly, okay? 3 days of motion here trying to hold this formation, and it can't. And so the breakdown seems like it's more likely to me. VWAP, 576, 200 simple moving average, 571, also the width of the range, the approximate range of these candlesticks right here. Bounces are clearly sell zones, folks. If you want to chase the low, you can. You're just going to open up some risk because there was quite a bit of reflexive buying the last time we moved into this area. So it's quick strikes short, and then bring your stops in very, very quickly so you can take your money and run. Okay? Qs. Let's go to the weekly. 50 in the Qs, 485. I think we're headed there. Heavy congestion zone. Should go right through it. As I mentioned through this entire session, listen, either we have a savage flush and a reflexive bounce, or a reflexive bounce and then another flush. But it's going to be a two-way tape. It is going to be a two-way tape, very likely a two-way tape, and the bounces should be sell zones. Okay? What are we staring down? Where's the Fibonacci? Here's the range we were trying to hold. 3 days. Actually 2 days, to be honest. Just trying to move up off of this zone. Can't do it. I see more downside action here, which is the next reason that I think that Bitcoin is going to follow. Okay? So, just my thought. Levels to watch on the way down. Listen, bounces into the round 500 number should make a great short. Absolutely fantastic short. Levels down all the way to 482 in terms of rotation. Okay? That's what we're staring down. Good luck trading today. Small size, folks. We're not here to bag an elephant. The reason I've been able to do this 25 years is to go slow and watch your risk. It's the only reason we survive. Manage your risk so you can live to trade another day. Take care, everybody. I'll see you soon.